Yeah, good afternoon, everybody, and thank you for dialing in. I will talk to you about the Brunner Investment Trust today. If I look in this direction, actually, is where I see my presentation, so I'm not distracted and playing on the internet while I'm speaking. You see here on the first slide, basically, with the agenda, actually, what I will talk about to you today. The first section, I touch on the trust, its goals, investment philosophy, and how we approach investment management for the Brunner Investment Trust. The second section will be a look back on 2022, what drove markets and what may drive markets in 2023, and how we approach investing in the next year or structurally over the next couple of years. And in the final section, I give you a bit of background on how we see the world right now and a couple of closing remarks about the strategy and how it is positioned. So let's get right into the weeds with the part that's important. The goals of the investment trust center around providing our investors with over time steady rising capital growth and high and steady rising payouts. So the Brunner Investment Trust is actually one of the dividend aristocrats with more than 50 years now of rising, uninterruptedly rising payouts over time. Certainly something we would like to continue going forward. And as such, we have structured our investment philosophy to fulfill those goals with a focus on quality investments that do have a bit of growth. Kind of this quality companies do have a lot of cash flows, free cash flows available every year. They can spend the money into organic, inorganic growth, but also in stable and rising dividend. As a resources at Allianz GI, we have the full support of Allianz Global Investors, global investment platform with locations ranging from Tokyo in Japan, Hong Kong, Shanghai, Taipei in Taiwan, Singapore to Paris, London, Frankfurt, and Europe, and getting input from all those resources into our strategy. Looking at performance in history, you can see here on this slide the returns over the last 10 years, and you can see that we have been managing to outperform our respective benchmark, both on a share price and NAV level over this period, the benchmark being a hybrid of 30% UK and 70% FTSE World ex-UK. On the right-hand side, the 50 years of rising dividends. I proudly have also to say that the Brunner Investment Trust is around since 1927, so we're almost nearing a centennial on the trust, and clearly want to extend the good numbers until then and beyond for the shareholders. A bit more on investment philosophy on this slide. We have a holistic approach, picking our stocks in both the UK and the global markets, having a holistic view on the portfolio. And what guides us is this investment philosophy that centers around quality. Quality, I mean companies that have the ability to generate return on invested capital over time, well above cost of capital. With that, they generate a lot of free cash and reinvest it into the business or pay to shareholders, as I mentioned before. And of course, very close to our heart is also a sensible valuation. Not to pay too much for an investment is critical in every situation. So stock that goes into the portfolio needs to meet all three criteria to be considered and being part of our investments. If you look at this slide, it gives you a hunch on kind of what spectrum we're looking at worldwide when we make investments. So you wouldn't expect us in being invested in the highest growth, early stage, non-profitable companies, nor in the company section that is in decline. So showing here on this slide an S-curve that exemplifies kind of a typical pattern of a company as it moves through time from early stage funding through rapid growth phase, maturing growth phase, into decline. And as you can see here, we're basically targeting those areas of the S-curve where companies are profitable, generate free cash flow, are able to self-fund growth, pay a dividend eventually, and provide a solid payout, all in order to meet the goals of constant and steady rising capital growth and payout growth for the investors in the Brunner Trust. Looking at Navigating Markets 2023, this is the section where my crystal ball comes into play. And of course, as every crystal ball, it's usually quite foggy, but try to explain how we see the world and how we approach the art of investment management as we move forward. Looking a bit back on 2022, it was a year that was clearly characterized by plenty of surprises for investors worldwide. First, the persistent inflation that already became noticed by central banks early this year, while in 2021, still central banks were sort of in a slight denial mode, believing that inflation was temporary. Moving into 2022, early 2022, Fed as the first central bank realized that inflation is more persisting. This was fired up more by the invasion of Russia and the Ukraine in February, putting more pressure on global supply chains and the prices of many energy resources. And as a consequence, you saw a sharp divergence in the pattern in the market when it comes to sectorial performance as well as style performance. On the left-hand side, you see that beyond the energy sector, there was hardly any sector that was providing a positive return this year, with the exception of healthcare, maybe. And on the right-hand side, you see the performance pattern of the broad market and its siblings, the value index, the MSCI value index, and the MSCI growth index. And quite obviously, the market was pressured in the last 12 months by rising interest rates, which is quite logical, mechanical reason. Aside of the heightened risk anxiety around the war, of course, rising interest rates increase the discount rate. Future earnings get discounted at a higher level, and of course, the fair value of this future cash flow streams goes down for the investor, and that's what we have seen in the market. We've seen it in equity markets, we have seen it in bond markets, which actually have been much more affected than equity markets. An unusual phenomenon that both equities and bonds being down in 2022, and equity markets had the benefit of still good earnings growth over the last 12 months, shielding them a bit. And as a global investor reporting in pound sterling, clearly the fact that almost every currency around the world gained in value versus the pound sterling helped, of course, returns and buffer the downside in returns for the Brunner Investment Trust and all global mandates reporting in euros or pound sterling. Now, many of these things will persist to some extent into 2023, though we believe that there will be, on the basis of a certain base effect, inflation cooling down as we move forward. The big question will be how persistent is inflation, or how fast do we get back to the target range central banks have in mind, around 2% inflation, or whether there is a higher base level of inflation, which would mean a consistent inflation fighting approach by central banks for a little longer. And given that we don't know the answer perfectly on these questions, we clearly focus on investing in 60 idiosyncratic return risk combinations, i.e. single stocks with good quality growth and valuation characteristics. And in order to help us when it comes to the growth side of things, we have sorted the world along the lines of various structural growth drivers, which are more predictable than the near-term macroeconomic outcome. And I'll show you a couple of them in this presentation. The first one is aging demographics. And aging demographics is something that's very well kind of in our prognostic horizon, because there is little change and little surprise, because everybody that is entering the workforce this year has been born 20 years ago, and so we have good visibility into demographics. And as we have aging demographics around the world, that is increasing the need, of course, for healthcare systems and healthcare products and services around the globe. Things like Novo Nordisk is producing, the lead producer in diabetes treatment, and diabetes is related to age. Likewise, Roche is providing us with oncology treatments, and of course, this is also related to age. And so we invest in various companies that may benefit over time from the structural tailwinds of demographics. The second item is the change in power supply for the world. Not only the Ukraine war, but also the need for decarbonization has highlighted the need for a change in energy consumption and drivers of energy supply. And here you can invest in companies along the food chain, from building out the grid, generating new energy resources, and providing the infrastructure in the energy change segment. And highlighting here companies like Schneider Electric being on the infrastructure side, companies like Assa Abloy, Timon, and Amatec doing its bit in the infrastructure space, but also on the power generation and the resources side. A couple of names mentioned here that do help the world in this transition to a new, more carbon-friendly and secure energy supply situation. Probably skipped this slide. I have, unfortunately, this one, going back a couple of steps. And this is a slide that shows you our take on digitalization. More typically, people think of, well, maybe Microsoft or one of the big tech giants, but digitalization is touching us in many areas of our life, from our daily consumer behaviors, the cars that we drive, the information our smartphones are producing when they're connected, to digitalization of the industrial sector. And we show on this slide that you can benefit from the digitalization drivers in many ways, well beyond when it comes to respect to the big tech companies. So that is from the healthcare sector to the industrial sector, over to consumers, and of course the tech area and payments too. So I'll give you an example. There's a stock in there, Align Technologies. They provide clear aligners to straighten the teeth. As such, the company is the inventor of the space, and they have a full digital solution offering for orthodontists, whereby you create a digital imprint of your jaws and your teeth. This digital imprint then is processed with an AI technology in a 3D printing process. The molding is created, and then the clear aligners created on the back of it, a full digital workflow that is helping the patients and the orthodontists create the best treatment optionality out there. So it shows basically that digitalization has reached every area of our world meanwhile. Moving forward to my closing remarks already, again, a bit of the crystal ball I mentioned. As we move in 2023, likely seeing a bit of a base effect leading to inflation rates coming off a bit, the second derivative getting positive on those, and we've seen the first signs in the US and even in Europe that this is happening. However, it doesn't mean that inflation goes quickly back to historical levels, and it remains to be seen how successful the central banks will be managing inflation going forward. Yet the inflation fighting exercises providing higher financing costs for consumers and corporations likely leading to weaker macroeconomic activity, eventually a recession into 2023. And while the stock markets do have a forward-looking ability, of course, they may react to weaker earnings outlooks as we move into 2023. It depends on how much downside there is and how severe a slowdown may be. When it comes to valuations, valuations generally are seen still in historical context as not low at this point, yet having come off from the peaks we have seen in the last 2 years after the COVID pandemic. And so the valuation picture is a bit more balanced right now, but much depends still on the inflation outlook. If rates rise further, of course, the discount rate goes up and the PE would go down further. So this may lead to additional headwinds. When it comes to the Brunner Trust, I want to share you this right-hand picture in particular, which shows the EPS progression of the companies invested in the Brunner Trust versus the benchmark in this case. And as you can see, the Brunner Trust has achieved its goals of investing in stable business models, high quality business models that have little fluctuations over time. As you can see, we have a very steady progression in terms of earnings, less volatile than the market, and we would expect this to continue going forward. Would that make me some closing remarks? Brunner Trust here around 400 years almost in 2027. We have centennial 50 years of rising dividends, focus on capital growth and income growth over time, and focusing to achieve those goals on quality companies that have some growth and trade at an acceptable valuation for us, being backed by a broad investment team at Allianz Global Investors. And with that, I would close my remarks and hand back over to AJ Bell.